Hello everyone. In this video, I would like to discuss the crypto fundamentals, uh, market fundamentals, and in the next part, we are going to talk about the crypto technical analysis. So, in general, we would like to speak about the macroeconomic factors that could affect all the markets, especially crypto markets, as well as the crypto, Bitcoin halving and market cycles. And we want to look to the market in terms of like very long term, especially Bitcoin in this case. All right, let's start with some fundamental part. I mean, in the beginning, we will start with market fundamentals, which the import. I mean, there are a lot of factors that can affect the market, as you probably know. But here we are going to pick the important ones. So first, the Federal Reserve, the central bank of the U.S. United States, the Fed interest rate is very important. Inflation, QT and QE, which stands for quantitative tightening and quantitative easing, which we will uh, define them and we will talk about them further in this video, and also Bitcoin halving and market cycles. And then we will go ahead and speak about technical analysis on Bitcoin in long term and also mid-term, or I would say short term. Okay, this was the introduction, and we will start with inflation. What does inflation means? Inflation is a very important factor in economy. So an increase in the price of goods and services that means inflation is rising. So in this case, when inflation rises, people purchasing power will decrease due to the high inflation and vice versa. When the inflation decreases, the purchasing power, the money will get stronger and the purchasing power will increase. So in the case when the inflation is rising, the purchasing power will decrease over time due to the high inflation. So, how do governments control inflation? So, these are the important factors that I am showing you, which is very, very crucial to, to the market directions. So, how do governments control inflation? Let's see. The first thing is Federal Reserve Funds Rate, Fed funds rate. What does the interest rate or funds rate mean? Both are the same. The rate that costs you to borrow money. For example, when the interest rate is very low, when the interest rate is very low, when you go and borrow money, you you pay lower interest to the bank or to institutions that you're borrowing money from. But when the interest rate is high, uh, borrowing money will be very costly since the rate is high and since the interest is high, and you have to uh, return more money to the institutions. Basically, uh, if you look at it from this perspective, that when the rates are high, borrowing money is costly, and when the rates are low, the funds or interest rates are low, borrowing money will be easier. So people will or businesses tends to borrow money and invest on their businesses or invest on many things else. All right. So this is very All right. So this is very important. Like Federal Reserve, the central bank in the U.S., they use this fund rate, interest rate, when they want to control inflation and control the economy. I would say when if Fed rate increase, if Fed rate increases, the trend matters, not the exact point or a number. If the trend is increasing, if the Fed rate is keep increasing rates, that means we are in the quantitative tightening period. So what does quantitative tightening period means? When inflation is high and the Federal Reserve wants to increase the fund interest rates, start increasing the rates, that means borrowing money will be costly. So the amount of money in the economy will keep decreasing, and we will be in quantitative tightening period. That means they are tightening the economy because they are increasing rates. People will no longer borrow money or invest more in stocks or their own businesses or anything else. So money will be stronger, and so we are in a tight or tightening period. So this is quantitative tightening definition, which will result in risk off. That means if you look at here, I wrote quantitative tightening period when the trend of rate is increasing, going up. When the Federal Reserve decides to increase the rates, we are going to go to the quantitative tightening period cycle, I would say. So which results in risk off. That means markets will the huge or big whales or investors won't invest huge in markets. So this will result in markets drop. Markets will drop. All right. That means risk off. That means the risk is off. In the second scenario, if the Fed starts decreasing rates due to, for example, let's assume. So now when I'm recording this video, as I said, the inflation was very high. The inflation was very high. That's why the Federal Reserve started to increase rates. From 6 months or 7 months ago, and we entered quantitative tightening period 6 months ago. So markets went risk off and markets drop massively. But in the second scenario, which is not the case at the moment of time, August 4, 2022, if the Fed starts decreasing their interest rates due to the normal economy and normal inflation. If the inflation is normal, the normal figure for inflation in US is from 2 to 3.5%. If the inflation is about 3%, that means we are in a good situation. The economy is normal, so there is no point if the Federal Reserve starts increasing rates and they starts to decrease the rates, and the normal rate for the normal interest rate would be 1 to 1.5%, or I would say 1%. All right. When the Federal Reserve start decreasing the rates from the top, for example, now it's 2.5. If they decide to decrease it from 2. and we will be in a quantitative easing period in this case, which will result in risk on. Okay, money will lose its power, the amount of cash will increase in the economy, and investors starts to invest in the markets, in the risk assets. It means risk on period. And so why they are going to do that? Because they know that since we are in a quantitative easing period, if they keep their money, if they save their money will lose its power because of the money printing of the central banks. If we are in quantitative easing period, which one of the popular example of quantitative easing period, it was when the COVID started. It was the massive quantitative easing that we had in history, that we never had before, when Federal Reserve in the U.S. Central Bank started printing money a lot to help the economy, to help businesses, to help people to survive, because everything were shut down at that time. So that was quantitative easing, which I will show you in the Bitcoin chart and the results of it when it happened. And in this case, we will go risk on and the market will rise. All right. So the next slide is market cycles. Okay, as I said, if quantitative easing and inflation rising, this is the best case for a market, for financial market. The first thing, when the Federal Reserve is decreasing rates and they are printing money to help the economy, and uh, when it starts, when they are going to start doing the quantitative easing and the inflation is rising, when you look at the data and the data says inflation is rising and we are still in a quantitative easing period, it is very bullish for markets. Very, very bullish. This is the case when the COVID starts, as I said, and in the day of the COVID, market dropped massively. That one is all right. That was the black swan event. But after that, uh, we were like US was printing money, and it was quantitative easing period. They decreased the interest rate a lot to 0.25% only. 0.25% only the interest rate, and they started helping businesses by giving them cash. All right. So quantitative easing was massive and inflation was rising at that time because they were printing money and give people money in society, and inflation started rising. So we were in quantitative easing period and inflation was rising, so we could expect a very bullish market, which happened actually. Bitcoin went from, I would say, $5,000, $4,000 to $69,000. I mean, it was like more than 10x or 12x you could get from your money if you have invested on Bitcoin at that time. However, if we are in a quantitative tightening period, which we are right now, and we are in high inflation, we are already in high inflation at the peak. But the politics of the US is tightening the economy because they are rising rates, and it's very difficult to borrow money right now. Cash is strong, inflation is high. They want to control inflation. That's why they are increasing the rates. So we are in a quantitative tightening. Inflation is high, so, and we have bearish market. Bitcoin dropped from $70,000 to up to $17,000 or $18,000. I mean, Either you have to take profit from the markets and exit the market, or you have to start investing. This is uh, you need to know it. Like, I mean, you need to understand. You need to be able to differentiate between the cycles and the periods. All right. So when now we are in QT and we have a high inflation. When the market starts to rise massively, so when the Federal Reserve convinced that inflation is going to be trending down, they see that in data that they are getting. Inflation is trending down, the 1 month, 2 months, 3 months. They will start thinking that okay, the inflation is going down, and we need to start decreasing the rates. So in that case, inflation is uh, trending down, and US is going to decrease the rates. So in this case, market will be bullish, not very bullish. In the first case, was very bullish because inflation was rising and QE as well. So when the Federal Reserve starts, the moment that they starts to decrease the rates and they go to quantitative easing, like, because this will not happen in one day. These all these are all periods or cycles. So when okay, right now we are in QT and high inflation. All right. When the Federal Reserve sees that we are getting lower amount of inflation in a couple of months, they might start to think that all right, we need to uh, decrease the rates. So in that case, when the moment they decide to decrease the rates, what will happen? We are going to enter QE again. We are going to enter QE, but the inflation is a bit high, right? I mean, still high, and it's trending down. It's not rising. It's trending down. So if we are going to enter QE, which is quantitative easing, and the inflation is decreasing, the markets will start uh, find bottom first, finding its bottom and start increasing, and they start to look bullish. But when they get very bullish and they start rising, I mean with high speed, when we are in QE, quantitative easing, still in the quantitative easing, Federal Reserve decreasing rates, money will be cheaper to borrow, and the cash will lose its power, and inflation is going to rise because of, I mean, printing money. In that case, it's very bullish for markets, very bullish for markets. But if we are in the QE and inflation is trending down, it is the moment that markets will find its bottom, because we are the transition between QT to QE is in the middle of here. In this two, the middle of them is uh, we are entering QE because of decreasing rates, but inflation is already high and it's trending down to find bottom. In that case, the market is going to transit to from bearish to bullish, but it takes time to be very bullish, because we have to reach to the bottom of inflation, and then from the bottom they start to rise. When inflation starts to rise after finding its bottom, that very bullish market will start. But what huge investors do in the market, they start to invest All right, so you can, as I said, you can join the free Telegram channel, and we share our opinions about the markets, and we look over the macro perspective of the markets in the free Telegram channel, and you can join it, and we will talk about these factors live about the market. Here I'm just explaining, it's just educational video, but in the channel we are applying these factors on the live markets so you can easily understand those. And all right, the next, okay, the slides are done, and we are going to, as I said, uh, we are going to explain about technical analysis and Bitcoin halving and market cycles in the Bitcoin chart. All right, let me bring the Bitcoin chart for you. All right, here is the Bitcoin chart, as you can see. All right, if I want to talk about the Bitcoin, you know that like over time, US is printing money, US dollar. All right, and so we are moving in Bitcoin in a rising channel. Why? This is a bullish market when we have, in technical analysis, when we have higher highs, these high, and higher lows. The lows are above each other. This is a bullish market. This is the best case for a bullish market. Remember, markets will never, according to the cycles that I explained for you, markets will never move like this always, to the upside or always to the downside. Markets move in zigzag, like higher high, higher low, another higher high, higher low, another higher high. This is a bullish market. A bearish market also has upwards price periods, even a bearish market. So markets moves like this. You can never expect Bitcoin to move always like a straight line to the upside. Never. It's impossible for any market. If you look at even gold, you can see that as well. Just let me delete this, and we will continue the video. Alright, so now you understand. This is Bitcoin from 2010, which was created until now. We can start to say that Bitcoin is bearish market when the last low is taken out, which is right now 3,006 $3,600, which will never happen. I don't think so. You will never see Bitcoin at $4,000. All right. This is a bullish market. Why this is happening? Because, as you may know, when when we say Bitcoin, BTC price is relative to US dollar. So we are saying BTC, you are saying BTC uh, divided by USD, US dollar. All right. So when you are saying this, when the denominator, which is USD, increases, that means it gets stronger. As I said in the crypto fundamentals slides, when we are in quantitative tightening period and the Federal Reserve is increasing rates, that means what? That means USD is getting stronger. All right, we spoke about it like a couple of minutes ago regarding this. So you know that right now, when we are in QT and rates are increasing, that means USD is getting stronger. When the denominator is uh, when the denominator is increasing, the whole BTC USD needs to drop. This is simple math, very simple math, very simple. So we expect BTC USD to decrease when USD get stronger, and when BTC USD goes up, when we are in the QE, when the inflation is rising or even trending down, the important thing is QE. When Federal Reserve starts to think to decrease the rates, so USD will start to get to lose its power, and the whole thing BTC USD, when the denominator goes down, decreases, the whole BTC USD goes up, the market will be bullish, as I explained. So let me delete these. Sorry for wasting your time. I don't want this to be here. All right. Okay, let's continue. So this is important. Explained here on simple math, which I talk about also Q and QT. So the next thing that I would like to talk about, so you know that BTC USD is in a rising channel and it's very bullish market in general. But since it's the Bitcoin is bullish, I don't. That doesn't mean it's always going up. As I said, we have higher low, higher highs. You don't want to buy in higher high, and you don't want to sell in higher lows. According to the market cycle that I explained, you have to understand which period that we are going to live. If a period of time which Federal Reserve wants to decrease the rates and we are going to enter quantitative easing, that period of shift from QT to QE, the moment that they decide, that means the bottom is in all the markets, not only Bitcoin, all the markets. That period of time that the Federal Reserve wants to shift from QT to QE, higher low is set. So you want to buy in higher low and you want to sell in higher highs. So we are going to talk about this further. All right. So apart from this macroeconomic perspective, we have Bitcoin halvings as well. What happens? Bitcoin, miners will are mining Bitcoin. All right, and they are earning Bitcoin per block that they mine. So what happens in in halvings, Bitcoin halvings? What happens is the following: the reward that they obtain from each halving will divided by two, will be half, like will be cut into half when halving starts. So when the reward gets into half, that means they are getting lower money. That means the price needs to. All right. So in every halving, the miners will their rewards will cut into half per each halving. For example, if here before this halving they are earning, for example, let's say 16 Bitcoin per block, after this halving their rewards will be 8. So for them, for their business to be profitable for them, the price of Bitcoin needs to go up, so they can make profit, because they are getting half of their rewards compared to, for example, 4 years. Halvings happen every 4 years on Bitcoin. This is already programmed by Satoshi. So if in these yellow lines are the Bitcoin halvings that occurred, I'm showing you on the chart, so you can compare it with the price action of the Bitcoin after halving and before halving. What happens in Bitcoin is that when the halving starts, we have a hype. After each halving, we have a peak, and we starts to go to recession. Which, if you go and compare when the Federal Reserve starts to uh, hike, hike rates, uh, we are going to recession. And when the QE starts and it goes, and it will be same time as the halving and the QE, both will help Bitcoin to rise massively. So after each halving we have a period of bullish market, and after 1 year of bullish market we'll go down to recession. And so it will consolidate to get another halving, then after halving another hype. All right, so this is very important. These are the Bitcoin cycles, and you can just have this in mind. Bitcoin halving plus the macroeconomic perspective that I explained in the slides and here as well. So both are very important together. So now the price is here around $23,000. We finished our uh, Bitcoin halving at 2020, and the peak was formed in November. In November, here is the peak of this cycle. 8 November 2021 was the peak, and the recession started because Federal Reserve, actually I would say, if I remember correctly, if I'm not mistaken, they have decided to started thinking of going from QE to QT from here at this point. In November 2021, they start saying that. Not they didn't started. They didn't start to increase the rates, but they said that we are going to do that. So when they just the moment that they even think about uh, rising rates, and people starts to panicking that we are going to enter QT is uh, dangerous, so they start taking profits from the market and exiting the market, which I already taught you. So here the price was $50,000 or more than 50,000. They started saying that, and the market starts dropping and looking bearish. Is the bottom in on Bitcoin? We are still in QT, August 4, 2022, as I said. So since we are still in QT, I don't think so. The bottom is in when they start saying that we want to think uh, to decrease the rates. In that case, I can say surely bottom is in. However, the bottom will be in before they say that. Exactly like here on the top side, $70,000. It was we were still in QE, quantitative easing, and we had the halving, and everyone expected Bitcoin to get another peak above here and blah blah blah, but the market starts panicking and a drop. uh, it, I mean, looked bearish after this candle. These chart is in weekly chart, by the way, because we are looking at Bitcoin on the long term perspective. So here it was QE and no one thought about QT at all. Markets will, you know why? For example, the top was in, the top, the market topped out before even Federal Reserve says we are going to enter QT, and they start raising rates. Why this happened? Because the huge investors, the huge whales in the market, they have, they receive the data, the economic data, sooner than you, because they are rich, they are wealthy, and they have access to uh, data's orders and economic data's sooner than you. So when you hear it in the news or you read it in the news, that is already late. For example, here they started talking about it on the news that they are going to rise rates, but they had not started yet. The moment that they said, Bitcoin looked bearish and it was on 50,000, not in 70,000. So you already lost. Uh, you couldn't, I mean, exit on at $70,000. You could have exited at 50,000. So which is good. You got this much profit from the market if you started QE here, because the QE started here around $8,000. So QE, Bitcoin halving, both together. So you could be sure that Bitcoin will go much higher here, because we had Bitcoin at the same time QE started, which was perfect scenario. If we get two of them at the same time, look how went from 8,000 to $70,000 in less than from I will show you in less than to 70,000 in less than uh 2 years, less than 2 years, 540 days, 540 days. Perfect. And you could have exited here. You should have exited here because of they started QT, and you can see that we are still in QT and market is still dropping. We are still in QT. The moment, as same as here, same as the top, the moment that they say we are entering QE, we are going to enter QE at some point in the future, they have to. Cannot, the economy has cycles. They cannot always stay in QT. No, I mean, we are going to enter recession in this case if they do that. So the moment they start saying that we are going to enter QE, what will happen? Okay, what will happen is that basically I think the bottom will be in already, and we will be around here in this price, same as 25, 23, and the bottom is in, and we can be sure that you are going to buy Bitcoin at the bottom, and when it reaches the Bitcoin halving of 2024 in April, we will get the next hype. We bought here, let's say, and we are going to get another peak and another massive profit. All right, so this is the strategy that huge investors use in the market. They look at macroeconomic factors, QE, QT, inflation, federal funds rate, and they also look at Bitcoin halvings and their recession, higher lows, higher highs. Although Bitcoin is a bullish market, but you don't want to be in Bitcoin and hold Bitcoin when it started when it starts its bearish market and its recession. All right, and so we are still in QT. We still have time. They the market, the economy, the U.S. economy is still in uh, quantitative tightening as of now, and they haven't started even think about going to QE. That's why this will help me to say probably we will get another wave to the downside to test even 16,000 or $17,000 again, probably even lower up to 14,000. I don't expect Bitcoin below $14,000 and or 13,800. I don't expect Bitcoin below 13,800. Maybe it goes and gets shadow and bounce back up in the worst case scenario. Uh, Unfortunately, we are hearing that maybe the economy goes to recession. We enter recession in the future even. So we are not in the period that I would say bottom is in. Our macroeconomy factor are not showing us that in the near, even in the near future, we are going to enter QE and the economy will be in normal situation. So right now, inflation is very high at the peak, and Federal Reserve is raising rates. So we are in a massive QT, and so in that case, as I explained in the slides, we are in a bearish market and bearish period, and the bottom will be in when they say that they think that they want to enter QE. So right now I don't have any prediction. I have prediction, but it's not accurate. I would say, in my opinion, the bottom will be in November, December this year, 2022, and price will start consolidating, not very bullish for sure, and probably 6 months consolidation, and we will be here for until the beginning of 2023 even. So we have to look for QE and starts to reach to the Bitcoin halving. So if these two happens at the same time as it happened here, it will be very bullish for Bitcoin, very bullish for Bitcoin, and you can make massive profit on this move here. So we are looking ahead of it, and don't forget to follow the market and buy at in a uh, low price. So basically, buy low, sell high. And there are many technical ways to start predicting the peak of the next cycle of Bitcoin, but those are very like lengthy. If I want to explain this video is already very long, and I don't want to take more time from you guys. If you just join our free Telegram channel, we are sharing ideas on Bitcoin and the crypto market cycles. As I explained here, you are educated right now and you have information about all of these factors that we use for the market. So there we will apply it live on the markets. So thanks for watching, thanks for hearing, and bye bye.